Hi, everybody. As Reverend Monk said, I am Jessica Noth, and I work with Havenwood's Neighborhood Partnership, and I'm here to talk to you about repairing credit. I know you've watched other sessions likely on establishing credit and other topics on credit, and a lot of what we're using regarding credit reports and scores can be found in the Money Smart curriculum. And Money Smart has a website that's really helpful, especially if you need information on how to read your credit report. So this will not be all of the information on your credit report. This will be about repairing credit, but I wanted to tell you the area that it's taken from, which is Module 6 of Money Smart. Your credit history can affect your access to credit, so credit cards and other credit, loans, jobs, housing, insurance, and other important services. And so that is why it's so important, and that's why we want to talk about repairing your credit if it's low and maintaining your credit. So first of all, if you've never pulled your credit report, that's very important. That's also a key step in what we're going to be talking about today in repairing your credit. And you can pull your own credit report. You do not have to pay somebody to pull your credit report. Annualcreditreport.com gives you one free credit report every 12 months from each nationwide credit reporting agency. So this is Equifax, Experian, and TransUnion. This might be a review, but I want to make sure you know this. Also, until April, because of the COVID pandemic, you are able to pull your credit report every week. So typically it's one credit report from each of these reporting agencies every 12 months. So you could break it up between them, pulling one from Equifax 1/3 of the year, the next third of the year, pulling one from Experian, and the next third of the year, pulling one from TransUnion. The first time you ever pull your credit report, you might want to pull all three just because sometimes they have different information, but knowing how and where to pull your credit report is really important, and that you know it is free to you once every 12 months. So when we're talking about repairing our credit, we're wanting our credit score to go up or down. But really more important than the credit score is your credit report, because your credit report gives details that you need. It's going to show you how you need to repair your credit. But the credit score is one simple number that can let us know if our credit is going up or down. So a credit score is a number based on the information in your credit report, and it predicts the payment of bills and debts as agreed. So the better you are at paying your bills on time and as agreed, the higher your credit score. Because what it does is it shows creditors or lenders, somebody that's about to give you a home mortgage or potentially a car loan, how good are you at paying your bills? And do you pose a risk to them or a lower risk? So people with higher credit scores are likely to present lower risk to creditors. So I want to go a little bit over credit scoring. I know Miss Luckett in another of these modules spoke to you briefly about your credit score. I want to touch on it once more. Some of this might be review, just because some of this information is going to help us with talking about repairing your credit. So the basics of credit scoring is what we said before. It's a number calculated from information on your credit report. It's easier for lenders and car companies, credit card companies, rather than going and looking at your whole credit report and studying it, it's easier for them to have this one number to help them decide, are they going to lend to you? Generally, obviously, the higher number equals a better credit history, and it predicts the likelihood of your payment of your credit obligations on time and as agreed. So there's two significant factors that affect your credit score: whether you repay your debts on time and as agreed, as I've said like twice now, and your credit utilization rate. So your credit utilization rate is how much you currently owe on each account compared to the credit limit or the original loan amount. So that's your credit utilization rate. So if you have a high credit utilization rate, you are using a lot of that maximum balance on your credit card. And if you're using a smaller portion of that, then you have a better credit utilization rate. You don't want to be maxing out your credit cards all the time. You can max them out, but that will affect your credit score. So there's multiple producers of credit score. There's oftentimes you might have 3 different credit scores: FICO, the Vantage score, and others. And there's different models for different types of credit. We are just going to briefly talk about the FICO model score, and a lot of lenders do use the FICO score. So this is what your credit score under FICO is made up of. So 35% is payment history. So that's the largest amount that goes into your credit score, the most important thing. So you want to have a good payment history on your credit report, and this will affect your credit score. Then, so how are you repaying your debt? How have you repaid your debt in the past? How are you currently repaying it? The next largest portion that goes into your credit score are the amounts owed, the available credit being used or borrowed. So if you have several amounts owed already, that's obviously going to affect your credit score. The next is the length of your credit history. So you want a long positive credit history, and we'll mention a little bit more on that later, but the length of your credit history is about 15% of your credit score, and then a credit mix is 10%. So having a more diverse credit mix is more positive than having not much of a mix at all. So let's say you have 5 different credit cards that you use. And then let's say your sister has 2 credit cards that she uses. She has a car loan and she has a home mortgage. Her credit history is much more diverse. You only have credit cards over here, and she has a couple credit cards, a car loan, and a home mortgage. So those are different types of mixes in the payment. And you don't have to have a home mortgage to have a diverse credit mix. You can have other types of loans in there, but you don't want it just one type of credit. And then the other smallest part is new credit. So new credit lines that you open up or credit inquiries. So a good credit score, poor is 300 to 579. Fair is a little bit higher. Good is 670 to 739. So this is where it's going to start to be easier to, let's say, get a home mortgage on your home. And then very good and exceptional. This is just an example based on a FICO score. So one thing that I want to say, though, is your credit score is not a definition of you. If you happen to have a low credit score right now, that doesn't actually mean that you are necessarily a bad manager of your finances. Some people might be actually a really bad manager of their finances, and maybe they happen to have a good credit score. So don't let that be a definition of who you are, because if you have a really low credit score, there are steps and there are ways that little by little we can get that credit score up, and that's what this is all about. Some people don't even have a credit score because they don't use credit. That's why Ms. Luckett talked about establishing credit and how you can start to even have a credit score to your name. So you can improve and manage your credit score. This is really important to know that you can improve it, and paying your bills on time and as agreed is the key aspect of that. You've heard me say that a few times now, but just remember, paying your bills and on time. So after talking about the credit score and kind of establishing what that is and the different parts of it, we are mainly going to be talking about repairing your credit and maintaining a productive credit history. So if you have a low credit score, and let's say you're like, I want to take out a car loan, or I want to take out a home mortgage, or maybe you even know, okay, I'm not going to buy a house until 5 years from now, but I have a really low credit score. Now is a great time to start working on it, because you're not in a rush or stress to get it fixed, but little by little, you can improve that credit score so that when you do want to purchase a home, or you do want to purchase a car, or you do want to go look for another rental property to rent, you'll have a higher credit score for when those folks look at that. Your credit history does not have to be your credit future. If you have a bad credit history in the past, everything can improve. So repairing and improving your credit. Let me just get to my notes here. So you need to get and review your credit reports. That is why it was so important to know how to pull your credit report. And if you need help on that, contact a financial wellness. We're going to go over that a little bit later, just different financial wellness places that can help you with that. But you need to get and review your credit report regularly. Because if you don't know what's on your credit report, you're not going to be able to know how you can repair it. Dispute and correct any errors. We're going to talk about that at the end. So for folks that don't want to hear about that section, they don't need to, but we're going to talk about disputing and correct errors, because sometimes your credit score might be negatively affected because there's actually incorrect information on it or information that hasn't been taken care of correctly. So you want to get that taken care of and dispute that. Also, paying all of your bills on time and as agreed, according to the payment schedule that you have set up with your creditor. That's very important. Use as little of your credit limit as possible. So if you have a credit card where the maximum you can use is $2,000, you don't want to have used, if possible, sometimes the situations come up and we need to do this, you don't want to have used, let's say, 1,800 of those dollars, and you're almost maxing out that credit card and you're just making minimum payments on it. You don't want to get up to that credit limit. You want to stay more at 30% of your available credit and keep paying that off. Now, if you did have to use all of a credit card for some reason and max it out, continuing to make those minimum payments on time is a help to keeping that credit score at a better place. So you don't want to not make payments at all, at least be making those minimum payments on time. Use a credit building strategy, which we're going to go deeper in. Keep old accounts open if you can. So this is that part where I mentioned before when we were looking at that little pie chart about credit history. If you have a credit card that you don't use anymore, and let's say it's a zero balance, you can cut it up. If you're like, I don't want to use this credit card anymore, I have other ones open, but you know that one has a zero balance, cut it up, but don't cancel that credit card. Because first of all, that zero balance, that's basically an on-time payment, because you don't have a negative balance on there that you haven't been making payments on. It's an on-time payment because you're not having to pay anything on it. And also that is a credit card that you opened in the past. And that gives you a longer positive credit history. So you don't want to close that account, keep it open, cut up the card, don't use it, but keep it open if you can. Apply for credit only if you need it. You don't want to go and have a bunch of different credit cards or a car loan if you can buy the car. Negotiate different terms. So know that you don't have to just accept the terms that are given to you, but try to negotiate different terms. And then sometimes you can ask for a goodwill deletion. Okay, building credit. So part of repairing your credit is building credit. In a little bit, we're going to go into other key things about repairing your credit. But building credit, if you have a low credit card, a low FICO score, and you want to get that up, you want to build that because you know you want to be able to purchase a home, or maybe your credit score is even at a good place, maybe it's even above that 670 score, and you know you could get a home mortgage loan. If you get up in the excellent and exceptional range, your interest rate on your mortgage could be lower. And you might not have to have any PMI insurance. So that's another reason to have a higher credit score. So you might be able to get out a credit score on this mortgage loan on this score, but if your score is even higher, then your interest rate could be lower, and that's what you want, because then you're paying less on that house over time. So one thing is to get a secured credit card. If you have really bad credit and nobody's going to give you a regular card, a good way to start repairing that credit and building that credit is to get a secured credit card. Several banks have secured credit cards. I'm going to show you some banks that have a credit building loan that we're going to talk about. But with that secured credit card, you put a deposit in the bank that secures that amount in your credit card. And then you still are able to use payments and pay that credit card on time, but it's secured by your own money that you've put in the bank. So talk to different lenders about secured credit cards. A lot of our bank on lenders may have secured credit cards, or they have a credit building loan, which I'm going to talk about next. So a credit building loan, various lenders have, and here are a list of lenders. Several of them are bank on. So they have secured, safe banking accounts that you probably heard in the section about banking. But these are some credit builder products that are available in Milwaukee. So BMO has a CD credit builder, Bank 59, Educators Credit Union, Equitable Bank, Piramax Bank, Self-Help Credit Union, and other lenders. For example, other lenders have a secured credit card. So for example, Associated Bank has a secured credit card. So the credit builder loan is a great product to get your credit up. So a bank will deposit a certain amount of money in an account for you. And so let's say it's $1,000. So they will put that $1,000 in an account for you. You make payments on time into that account. So you're making, maybe it's $100 a month, maybe it's less, it's according to the terms of that bank, but you're making small payments to get up to that amount that they technically lent you. And then once you reach that amount, that money is there in that account for you. Now it's your money, but you have paid that loan little by little, and all of those on-time payments help bring your credit score up. You can also become an authorized user on an account. So somebody else that happens to have an account, you can become an authorized user on their account. You can get a cosigner to help you be able to get out a line of credit because their credit is better. And so having them as a cosigner, that reduces the risk to the lender. Also, you could apply for a credit card at a store or a gas station, and just be sure if you use that to purchase gas or you use that to purchase something at the store, then pay that right away. So apply for the credit card. You're going to go to Kohl's. You know you're only going to spend money at Kohl's that you have. You can apply for that store credit card and then pay with the credit card, and then just be sure you pay that credit card off right away. Those on-time payments will help repair and build your credit score. And make a large down payment and negotiate a loan for the balance. So that's another way to have on-time payments. So maintaining credit. Maintaining credit is part of, so once you've repaired credit, or let's say you're working on repairing credit, you at the same time want to be maintaining a good credit score and not going backwards while you're trying to repair certain things on your credit report. So pay your bills on time and as agreed, that you've already heard, and continue to pay down your debt balances. So when you pull your credit report, you have certain debts, you'll see different debts listed on there. You want to continue to pay those down. Continue to make the right payments on all of your debts, but pick one that you're really going to tackle and get paid off. The more recent credit, the more recent debt are the ones that you want to start tackling and getting paid down. Keep the proportion of the credit you use low compared with the credit limits. So we spoke about that. You want to try to avoid maxing out your credit cards. You want to keep it at about 30% of the maximum amount that you can use on that credit card. And don't apply for too much credit. If you apply for too much credit, then it's going to look like you're maybe in financial difficulty, and that's not going to bode well for looking like you have strong credit. So you don't want to go and apply for all different credit cards at one time. If you're shopping for a car, then a lot of times there's different hits on your credit. So credit inquiries, where let's say you want to go to a bank to maybe put down a home mortgage, or you want to get a car loan. Several inquiries, those are hard hits on your credit report. And that can slightly, not a lot, but that can slightly bring your score down. However, if you're doing something like going to purchase a car, and let's say you go to a dealer they'll sometimes hit several different lenders for you to see if you can get a loan or what your loan rate would be for that car. If there's a bunch of hits on your credit card as at one time, the credit reporting agencies will count that as one hit, because that's all with you looking for this car in a short period of time. However, you don't want to go and shop for this car this month and then shop again next month and apply for a credit card the next month, because those are all different hard credit inquiries. But a little helpful side note, if you've been improving your credit and you want to go get a car loan, what you need to do first, a better way to do it than have these car loan companies check all these different banks for you for a car loan, is for you to get pre-approved for a car loan on your own. So you heard about banking and different banking relationships. Go to your bank and ask them about taking out a car loan, and they can give you a pre-approval. Then you know how much you can afford for a car. You've already set up the terms for your car loan, and the car dealership is not the one that's taking action and causing other hits on your credit report. So work with your bank before you go look for a car so that you can get pre-approved and you know how much of a loan you can take out. Okay, avoid actions or inactions that may create new entries in on your credit report. One little thing I want to tell you about here is going back to Kohl's. A lot of you have probably gone to a company or a store and they say, hey, if you open up a Kohl's charge card, you could get 10% off this purchase. If you want a Kohl's charge card and you know you're going to use it, and let's say you're going to open that up because you know you're going to make those payments on time and use that to build credit, great, take that out. If you're only going to say, yeah, I'm going to open up a card so you can get that 10% off, and then you're not going to use that card, don't let them do it. The people that at Kohl's that are asking you about that don't realize that, but if you say, yes, I will get this Kohl's charge so I can get 10% off this purchase, that's a hard hit on your credit score. So if you're not planning on using that card anyway, don't let them take a hit on your credit report, because that will bring your credit score down a little bit. So that would be an action that you can avoid. You don't need another entry, another inquiry into your credit report. Pay your taxes and child support in full and on time. Not having those payments on time or in full, or you might get on a payment plan sometimes for your taxes, but you're making those regular payments on time. That will bode negatively on your credit report. If you're not making those payments on time, that's a negative entry on your credit report. Check your credit reports and regularly dispute errors. We talked about that. So you need to know what's on your credit report so that you can see things change, and that when you realize an error, you can dispute it. And also keep good financial records. Record your receipts, save your receipts, keep good financial records on what you've utilized, what you've purchased, bills that you have, your payment schedule, when the bills are due, and a lot of that is in budgeting and savings and probably tackling debt. Oops. So getting help. If you feel like you don't know how to read a credit report, or you're even confused how to pull your own credit report, there are places you can get help. Financial institutions often will give you help. They will give you counseling. They will tell you what your rights are. A nonprofit consumer credit counseling service can help. They can help you with your credit report. They can help you with repairing your credit. Housing counseling agencies approved by the Department of Housing and Urban Development. So that's HUD. So we have several housing counseling agencies in the city of Milwaukee, the United Community Center, Axe Housing, Housing Resources Incorporated. Those are all housing counseling agencies that have housing counseling, which is highly recommended to take that if you're planning on purchasing a home. But if you're taking their housing counseling, they also have things where they have counselors that can sit down, they'll look at your credit report with you and show you ways that you can repair your credit, or help you repair that credit so that when you're ready to buy a home or maybe a car, you're able to do that. Financial education nonprofit organization. So there are several organizations that help with financial wellness in the city of Milwaukee. Riverworks Financial Center, they are an excellent one to talk to. You can look them up on the web. They are in the city of Milwaukee, and they have their financial clinic, and they do one-on-one counseling. They can look at your credit report with you. They can help you dispute errors. They are there to advocate for you on your financial wellness, your credit. The Green Path is another organization. They do credit counseling. They do debt counseling and debt relief. Also, the YWCA has a financial center, and they do financial wellness and help people with financial planning. Certified financial planners and other places. So get help if you need someone to sit down one-on-one and develop a plan of attack for getting your credit score higher, or figuring out how to read your credit report, or looking how you can budget better. Get help at one of those institutions. Credit repair and debt consolidation. So this is a little bit deeper dive into the repair portion. So what we talked about before about maintaining and repairing, those are credit builder situations that we talked about to help get your credit score up, things that you can do to maintain it so your credit score doesn't continue to fall low. But there's a couple things that are out there that could help, but you need to use caution. So credit repair companies promise to fix your credit for free. And this you have to be careful of because it often involves disputing some or many of the items in your credit reports, but this is something you can do, for a fee. This is something you can do on your own for free. So they promise to fix your credit for a fee, but a lot of times what they're going to do is just dispute things on your credit report that you can do on your own for free. There's also debt consolidation businesses. So they offer different services. They often specialize in debt consolidation loans and debt settlement services. And we're going to talk about the differences on those too. So debt consolidation. Debt consolidation is taking out one new big loan to pay off other debts. So let's say you have 5 different debts and you're having to pay off all these 5 different things. So debt consolidation is going to lump all those 5 debts together, and you're going to have one big debt, but you're still going to have the whole amount of that debt that you need to pay off. And really what it's not doing is it's not addressing the underlying cause of the difficulty in paying off that debt. You still have the same amount of debt you have to pay off. Also, debt settlement. So debt settlement is working with creditors to accept a lower payment and settle a debt. So this is something also that you can do on your own. Sometimes, let's say you have a bill that went to a collection agency. The collection agency purchased that debt for a lower cost than what the actual debt was. So let's say you owed Best Buy a certain amount of money. Let's say you owed them $2,000. And then a collection agency purchases that debt because Best Buy is like, okay, I'm done. I'm not going to deal with trying to collect this debt anymore. The collection agency purchases that, and now they are trying to collect this debt from you, but they've purchased that debt for a lesser amount than that full $2,000. But they're going to get that $2,000 from you still because that's how they're going to make their money. But let's say they only paid $1,000 for that debt. So you owe $2,000 to Best Buy. Best Buy sold it. Now the collection agency only purchased it for $1,000. Sometimes what you can do is you can talk to that collection agency, and let's say you're like, okay, I have $1,500 right now. I want to pay off this debt. You could talk to them and say, I could give you $1,500 right now, and let's settle this debt. So you're not having to pay that full amount of $2,000. They're still making more than what they purchased the debt for, and you're done paying that debt. So sometimes you can settle a debt for a lesser amount. You can settle it and cancel it out. However, sometimes you might have to pay income tax on the portion that was settled. So that extra $500 that you didn't pay, that's like money you received. So you might have to pay income tax on that. So that's a caution there. And sometimes it can still show up on your credit reports as a negative entry. A debt settlement can show up as a negative entry. Then there's credit repair scams. You have to be aware of credit repair companies that promise to erase bad credit or remove other negative but accurate information out there. There are a lot of companies out there that are scammers. There's companies that are scams that say they're going to get you out of foreclosure and it's a scam. Companies that say they're going to help you with their property taxes that are a scam. Companies that say they're going to purchase your home that are a scam. So be careful for all those companies out there and really do your homework in checking the Better Business Bureau or online reviews. But credit companies that promise to erase bad credit or remove negative but accurate information, if you know this negative information on your credit report is accurate and they say they're going to remove it, that's a scam because accurate information is not going to be removed from your credit report. They also promise fast and easy credit repair. If our credit is a mess, which again is not a reflection of you as a person, but if our credit happens to be a mess, slow and steady wins the race. We've got to do the work to repair it. It's possible to repair, but it's not a fast and easy credit repair. Also, if they offer to create a new identity for you, that is actually illegal, and that would be going against the law. So if they say they can create a fake social security number to apply for a loan, you would be committing a crime. Also, if they want you to pay up front, a lot of times these credit repair scams will ask you for money up front, say they're going to help fix your credit, and then they don't do anything. So don't give them money up front, and also they don't tell you about the rights you actually have. I'm going to breeze through this because I want to get to reporting incorrect information on your credit report, but it's really important to protect your credit history. There are different ways that you can protect it with fraud alerts. If you are in active duty, you can have an active duty military alert. So if you know you're going to be overseas for a year, or you're going to be in active duty for a year and you want to put that military alert, these alerts require companies to verify your identity or require people to verify your identity before they are able to work with your credit. Also, there's extended fraud alerts, credit freezes, and credit locks. So extended fraud alerts and credit freezes, as well as initial fraud alerts, those are all free, and those are services that you can do through those 3 credit reporting agencies: Equifax, Experian, and TransUnion. So those are helpful things that if you are afraid that your credit card has been lost or stolen, those are things that you would want to look into. You can ask one of those financial advisors about that. Your credit history does not have to be your credit future. That is what we said in the beginning. You can repair your credit little by little and get it to where you want it to be. So really quickly, I want to talk about disputing errors in your credit reports. This is part of repairing your credit. So the big part is dealing with your own finances and paying your bills, paying your debts, that type of thing. But as I said before, there could be incorrect information in your credit report, and that is what could be causing a lower credit score. So you want to make sure that the information in your credit report is correct and dispute errors when they're not. So if you find errors on your credit report, you need to file a dispute right away, and be sure to keep records and follow up to make sure that that dispute was taken care of. So these are errors that could be on your credit reports. Identity errors. If your name is incorrect, if your address is incorrect, those things you can fix easily, but those you want to check. You want to check that information on your credit report. Incorrect reporting of account status. Let's say you know you paid off a debt and you know that it should be canceled or off of your credit report and it's not, that would be a dispute you can file. So that's something that could be affecting your credit score negatively because it's incorrect on your credit report. Data management errors, balance errors. So let's say you actually owe, less money than is reported on there. You want to check into that and make sure that they have that correct. Data management errors would be incorrect information that appears after it has already been corrected. So that's why you want to keep those good records, so that once you've done a dispute, you can go and make sure that that data is actually correct in your credit report. And then outdated information. So time limits on negative information. So generally, it can only be reported on your credit report for 7 years. So that's when there's outdated information. Let's say you have had a bill on your credit report for 7 years, and you know it's hit that 7-year time limit. Then you can file a dispute and say, I know this has been on my credit report over 7 years, it's supposed to drop off. So that type of information should drop off. It doesn't mean that the person you owe money isn't going to still come after you, or they could file a civil suit, but it's not on your credit report anymore. It typically drops off after 7 years. Some bankruptcies are an exception. So that would be one thing that you would want to dispute if it's not off of your credit report. Also, it can be confusing. It generally starts 180 days after you stop paying on the debt. So if right at 7 years you dispute the error, what you think is 7 years, it just might not have gotten to that actual 7-year reporting period time. Medical debt generally does not go on your credit reports until it's been unpaid for at least 180 days. So you have that 180 days to resolve billing disputes, make payments, and make payment arrangements, because a lot of times medical doctors will take payment plans. Medical billing will take payment plans. You can make those payment arrangements. So those 180 days gives you time to resolve that, resolve disputes with your insurance company, making sure they're paying what they should be. So use those 180 days to resolve all of that, so that that medical debt doesn't end up on your credit report. So the two ways that you can dispute errors on your credit report are either online or by mail. What you need to include in your dispute letters is your complete name and address, a clear description of each item you are disputing and the reason for each dispute, and then a request for the correction or the removal, depending what would fit with that particular item. And then you also want to include supporting information. So send copies. If you're doing this by mail, send copies and not originals. So let's say receipts, credit card or account statements that show that you've actually paid what they say you haven't paid, or that your balance is different than they say what the credit report says it is. An image of a check or a canceled check that you use to make a payment, a screenshot of an online transaction or an automatic bill payment. Those is all supportive information that you can prove, hey, this balance is actually different. I actually paid that off. I actually made that payment. So you want to look and make sure that that's not reported incorrectly, dispute it if it is. After you file a dispute, the credit reporting agency will send you a letter. Incorrect information cannot be put back. So check to make sure that that incorrect information is off of your credit report and that it stays off of your credit report. And then you can also request notices of corrections to be sent to individuals or businesses that received your report. So let's say that somebody, so you were trying to buy a car, or let's say you were applying for a job and they got an incorrect credit report that has some negative information that shouldn't be on there. You can request that the credit reporting agencies send that information on those corrections to those businesses or those agencies. So remember, if you find errors on your credit reports, file a dispute right away so it doesn't affect your score negatively. Be sure to keep records and to follow up to make sure that information is taking off. Again, that's a part of repairing your credit and maintaining your credit to make sure it's the best it can be. And also, if you need more help, remember to contact one of those financial institutions. You can connect with Reverend Monk and his team that are providing all of these financial wellness sessions, and they can connect you to the right places to help. And a lot of those banks that have those bank on accounts or have those credit builder accounts, talk to them, and those lenders can help you through some of these things that you need to do. Thank you so much for your time, and that concludes this session.